Today we're breaking down the latest movements in the US economy, Wall Street and the dollar and what it could mean for investors and everyday Americans. Section 1: Market Volatility and Geopolitical Impact. Global markets are experiencing volatility today after recent escalations in the Middle East, which have pushed oil prices higher and triggered movements in stocks and safe haven assets. Commodities like gold and the US dollar are seeing inflows as investors seek stability during uncertainty. Section 2: Stocks Reaction. Wall Street has been under pressure. Major indexes like the S&P 500, NASDAQ, and Dow Jones have seen recent downward movement as investors navigate uncertainty from inflation, AI disruptions, and rising energy costs. Defense and energy sectors are seeing relative gains, while travel and airline stocks struggle due to higher fuel prices. Section 3: UBS downgrades US equities outlook. UBS has recently downgraded US equities to neutral, citing high valuations and the possibility that other global markets may outperform the US going forward. They also highlighted risks to the dollar and noted weaker growth sensitivity among US companies. Section 4: IMF outlook on US economy. According to the International Monetary Fund, the US economy is expected to remain resilient in 2020-26, with GDP growth forecasted to rise and unemployment potentially declining. However, the IMF warned that rising federal debt and tariff policies may put pressure on long-term economic stability. Section 5: What this means for the dollar. The US dollar remains strong as investors seek safety amid geopolitical tensions and market volatility. A stronger dollar can reduce inflation for US importers but may make exports more expensive, impacting corporate earnings in export-oriented sectors. If you want more daily updates on the US economy, markets, and the dollar with clear explanations, you can actually hit subscribe and turn on notifications.